Good morning, students. Yes, good morning, Ramnivas, Ashok, Nikita, Kadambari. So, how are you guys? So, today, students, we shall be doing profit and loss items. So, how does an auditor verify different profit and loss items which are reflected in statement of profit and loss of a company? So, students, you know that uh, format of statement of profit and loss is provided in the is given in part 2 of division 1 of schedule 3. So it is I am showing you the schedule 3. So this is the format of profit and loss as contained in part 2 of division 1 of schedule 3. So it shows how profit and loss account of a company is to be presented and in what manner. And it also uh, reflects how different items are to be stated. Yes, Srinivasan, provisions we shall be taking up today after doing profit and loss items. So don't worry about that. We are not going to miss any topic. So this is the format of presentation of profit and loss items. Revenue from operations, other income, total income, figures for current period, figures for the previous period, and expenses. Cost of materials consumed, purchase of stock in trade, changes in inventories of finished goods and WIP, and other expenses like employee benefit expenses, finance costs, depreciation, total expenses, and profit before tax, provision for taxes, and so on. So, this is the format of profit and loss. Statement of profit and loss in case of companies in accordance with the requirements of Division 1 of Schedule 3 of Companies Act. Okay. So, Devraj, this Schedule 3 I have already uploaded on your on the website. It is in your accountancy module. It is not in your auditing module. It is in your accountancy module, module 3. From there you can download it. Okay. Yes. So, so this is the format. Now we come to your module. So we are at page 5.91 of your module. Page 5.91 of your module. So how to verify different items appearing in statement of profit and loss? So first item is sale of products and services. So sales or revenue, you very well understand, students, it is one of the major items in financial statements of any entity. SA 315 states that risk of material misstatements in case of revenue items is generally high. There is a risk, there is a chance that the companies may misstate their sales, that they may show fictitious sales, or the sales may be understated. Sales may be out of books. Okay, so these things are always there. So therefore, SA 315 states that risk of material misstatements in case of revenue items is generally high. So therefore, auditor has first of all to verify internal control pertaining to sales, how sales are booked, whether sales are made to approved customers, what is the system of receiving orders, whether duties are segregated, so what is the system of dispatch of the goods, and how the entries are made in books of accounts finally, how stock records are updated when goods are dispatched out of the factory. So all these things, all the controls prevalent to these aspects will first of all be verified by the auditor. Okay. So while verifying sales, the auditor would be first of all concerned with whether the transactions which have been recorded as sales, whether these have occurred. Now we are talking about, students, profit and loss items. So assertions relating to transactions items apply. So earlier we were talking about account balances. So we had understood assertions relating to various account balances like trade receivable, trade payables, like equity, like inventories, like PPE. So this now in case of sales items, now in case of items which are in the nature of transactions which pertain to class of transactions, now we will be verifying assertions pertaining to class of transactions. So first of all, the auditor will see whether the sales have occurred. So the transactions which have been recorded in the books of accounts, which are recorded in the financial statements, whether these have occurred at the first place. So how the auditor is going to get comfort about this? So obviously he would be performing his usual procedures like testing a sample of sales invoices and tracing all those transactions from the moment the order was received and how the goods were dispatched. He would be verifying transport receipts, and he would be verifying that good dispatched have been reduced from stock records, and these are also booked in sales account. So these kind of things he would be seeing. He would also be verifying GST returns, e-way bills. So such kind of procedures which show that transactions have occurred. Okay, like say when he is verifying e-way bills, so it is a proof that goods have moved out of the premises of the company, that these have moved out of the factory premises. So it is again a proof. Okay. So all these kind of usual procedures which we have been discussing about. So these he would see. So what are the procedures? What is there in your module? So to see that whether some sale invoice is recorded twice or cancelled invoice is also recorded, so it should not be there. Test, check few invoices with their relevant entries in sale journal. So these are very general points. So we are not going to repeat it. So whether any fictitious customers have been recorded, So all the usual stuff. Calculate ratio of sales returns to sales. So all the usual things, all the common points which you would see. So if there are sales returns, what were the sales return in the preceding period, and compare if sales return in the current period is higher, then what is the reason of it? And perform cut-off procedures to ensure that revenues are recognized in current period, that all the sales which need to be recorded up to 31st March, these have been recorded, and according to the cut-off date. So all these things. So students, while attempting any question pertaining to audit procedures in your exams, as I have told you earlier also, that first think what the question is asking from you. What is the nature of item which is being asked? Okay, so obviously you have read so many things, and it would not be possible to for you to remember all the points, and you are not expected even to remember all the 10-15 points which are written in your module. So what you have to do is you have to form an idea in your mind that these can be procedures pertaining to a particular item, and you write down 4 or 5 procedures there. 1, 2 you can make from your common sense, and remaining could be specific from what you have remembered. Okay. So completeness means that all the sales which should have been recorded have been recorded, that the sales recorded are complete. So obviously the auditor would be checking cutoff regarding these, and he would also verify that uh, credit notes issued after the accounting period. Now this is an important point. So this we have discussed earlier also. Say sometimes it so happens that companies book fictitious sales near the end of the reporting period to increase their revenue. And in the next year, in the beginning of the year, say in the month of April, they reverse those entries by credit notes. So they show sales return. In 1 year, sales are increased, and in another year, sales are shown as sales returns by issuing credit notes. So this is a way of inflating sales. So if credit notes have been issued post year end after the accounting period, then the auditor has to see whether these credit notes are genuine or not, and what is the reason of issuing so much of credit notes post year end. So he has to gain assurance about these things. Review GST tax and GST returns, all this we have discussed. And next step for him to see is that all sales have been measured accurately. So here students, the assertion is written as measurement. You would be wondering that we have not read about measurement. Measurement, just it is another name of saying that sales have been recorded accurately and properly, and classified properly. So it relates to accuracy assertion. Okay. Yes, Rituraj and Suman Goel, I have already answered your question. So what is the meaning of measurement? Measurement means that it has been put in the right account and at the right amount. So it covers both the things. It covers accuracy also and it covers classification also. So how the auditor would ensure that sales have been measured at appropriate amount, that these have been recorded at accurate amounts. Obviously, he would be checking sales transactions, relating it with the sales bills, checking calculations for accuracy. And say in case sales have been made in foreign currency, then the standard point AS11, ये students, ये मैंने आपको बताया था that this point is common in many of the items. So अगर कुछ और याद ना आए तो आप AS11 की रेफरेंस देके लिख सकते हैं. तो ये एक स्पेसिफिक पॉइंट भी है. ओके. So obviously, sales, if the sales are being made in foreign currency, then these have to be valued in accordance with AS11 for giving effect to change in exchange rates. So this is one of the point which fits uh, in many items. Okay. Now, disclosure. Now, how revenue is to be disclosed as per requirements of Schedule 3 of Companies Act? Now, there are two requirements. There is a separate requirement for finance companies, and there is a separate requirement for companies which are not finance companies. So finance companies, you mean, you can understand that companies which are engaged in the business of providing loans. Okay. So in case of companies which are not finance companies, the revenue from operation shall be disclosed separately in the notes. As breakup of it will be given: sale of products, sale of services. So if the company is engaged in providing sale of services also along with sale of its products, then sale of services have to be separated from sale of products. These have to be reflected separately in financial statements of the company. So this is again an important point, that sale of products and sale of services, these have to be shown separately in financial statements. Not only consolidated figure, but a breakup of it also has to be given. Okay. And say in case of, and grants or donation in case of Section 8 companies. So Section 8 companies which are formed with the objective of providing charitable, pursuing charitable objects. So in case of those companies, donations would be the main item of the revenue from operations. So in case of such companies, grants or donation received, these shall be shown, and other operating revenues. If there are some other operating revenues, these would be shown here. So Operating revenues, students, you have to understand that operating revenues are those revenues which are arising from the core business of the company, which are arising from the core functions of the company. These are called operating revenues. Okay. Less excise duty. This is not now so much relevant after introduction of GST, because now excise duty is on very few products. So in case sales are inclusive of excise duty, then excise duty has to be shown separately after reducing it. So in case of finance company, revenue from operations shall include from, and in case the company is a finance company, then revenue from operations shall include revenue from interest and other financial services. Because in case of a finance company, the main income that would be flowing to the company would be in the form of interest, because the company is in the business of granting loans. Okay, so in that case, it would become revenue from operations. So main operating income would be interest in such a case. Okay. So revenue under each of the above heads shall be disclosed separately by way of notes to accounts to the extent applicable. And whether brokerage and discount on sales has been disclosed, this has also to be disclosed. Related party transactions. So this is also an important point. Again, students, अगर आपको एग्जाम्स में कुछ ना याद रहे, if you do not remember anything, so remember related party transactions. This point can also fit anywhere. In any of the audit procedures, you can write, and you would be getting valid credit for the same. So remember two things which are fairly common in the audit procedures. One point relates to related party transactions, and another point AS 11, effect of AS 11. Okay, students. So now we come to other income. Other income comprising interest income, dividend income. So what is included under the head other income? Yes. What is included under the head other income? So any income, students, which is not linked with the entity's core business operations, it is called other income. तो जो कि उस कंपनी का मेन काम नहीं है, उससे इनकम हो रही है, so that would be known as other income. Like say the company has invested some money in shares, or say company has invested some money in fixed deposit, it has kept some money in fixed deposits with bank. So obviously it would be earning interest on those fixed deposits, or it would be earning dividends on those shares held. So where these would be reflected in the financial statements of the company, these would be reflected in other income. These would be reflected in other income. Why? Because these are not part of the core operating revenue. So it is a residuary head in Schedule 3 pertaining to other income. Okay. So interest on fixed deposits. So how the auditor is going to verify this? That whether interest is accounted for properly. जितना interest receive होना चाहिए था, वही फाइनेंशियल स्टेटमेंट्स में रिकॉर्डेड है. सिमिलरली डिविडेंड्स. So dividend students are recognized in statement of profit and loss only when these three things are met. So what are these three things? Number one, that the company's right to receive payment of dividend is established. That there is a right that the entity which has invested the money in the form of shares, it is entitled to receive the dividend. And number two is that it is probable that money would flow, that economic benefits associated with the dividend would flow to the company. And third most important condition is that it can be measured reliably. It should be capable of being measured reliably. So students, again you would see that this thing is common, that you recognize something, be it a cost or be it an income item, when it is capable of being measured reliably. So ऐसा हमने पीपीई में भी पढ़ा था, ऐसा हमने इंटेंजिबल एसेट्स में भी पढ़ा था कि कॉस्ट तभी रिकॉग्नाइज होगी व्हेन इट कैन बी मेजर्ड रिलायबली. ओके. So students, when you would read the chapter, you would try to establish, your mind would try to establish many interlinkages between the things. It is an automatic process. It would neither happen when I am telling you. It would neither happen when you would be generally thinking only. It would only happen when you read your module and you try to remember the things. So if that process happens to you, it means that you are on the right track. You are on the right track for your exams preparation, not only in case of auditing, but in case of other subjects too. Okay. So gain loss on sale of investments. Say if a company has made some investment uh, and and ultimately that investment is redeemed during the year, it is sold off. So where would the gain or loss on that investment would go? It would be shown here in the other income. Okay, so like say if the company has made investment in mutual funds and the mutual funds are redeemed during the year, so obviously the difference between the redemption price and the carrying value of investment, this has to be booked somewhere, so it would be booked here. So what are the procedures relating to items of other income? So for testing occurrence assertion, so just common sense procedures. This you can write this you can write yourself also by thinking logically, like obtaining a listing of fixed deposits open during the period. Okay, what does this mean? That the auditor would obtain a list of fixed deposits which have been opened by the company during the year, which have been made by the company during the year, and see at what time these were made, and then he would try to calculate the rate of interest which is there on fixed deposits and see whether it is proper or not. So these things, verifying arithmetical accuracy of interest calculation. So this also helps to see that whether uh, these these income have not only occurred, but these are also complete and and these have been recorded accurately and classified in proper head, or you can say that these have been properly measured. Okay, so usual stuff, students. Like another thing is, students, whenever somebody pays you interest, so you would be reading in your income tax law classes further down the line. So generally, whenever say bank pays interest to you, to some company, or so we are talking about companies. So we assume that bank pays interest to the company. Company has made some fixed deposit with the bank. So bank would be deducting TDS. Okay, so if the interest is uh, above a certain limit which is specified in the Income Tax Act, so the bank would be deducting TDS, tax deducted at source. So this TDS would be reflected in a in the income tax on portal in a form which is called Form 26AS. Okay, so the auditor can verify those things. So recently, the TDS details are being shown separately in Form 26AS on the portal. Okay, so these kind of things. Similarly, for dividends, verify that the same are recognized in the statement of profit and loss only when the right to receive payment of dividend is established. That when it is certain that the company would be receiving dividends, not only on basis of guessworks or conjectures. Like there may be press reports that the company is going to declare dividend on its shares. So by such press reports, if these are in the nature of conjectures, so this right is not established. So dividends have to be recognized only when right is established, and these are capable of being measured, and it is probable that money would flow to the company. Okay, and required disclosure for other income. So what is required disclosure in schedule 3? So other income shall be classified as interest income in the case of company other than finance company, because in case of finance company it is going to be classified as operating revenue. Okay, dividend income, net gain loss on sale of investments, and other non-operating income. Simple 4 things. Now, another schedule 3 also requires to disclose this as additional information. Students, it may so happen like say some income tax survey is carried out at the premises of a company, or a search is conducted under the provisions of Income Tax Act. So some undisclosed assets are found during the course of such actions, such regulatory actions by the income tax department, like search or survey. So schedule 3, now this has been made, this amendment has come just 1-2 years back when schedule 3 was amended, and it was rather I would say it was completely revamped. So there were many changes made 1 2 years back when the latest amendments came. So these all additional regulatory information, most of it is flowing from those amendments. Okay. So the company shall give details of any transactions not recorded in books of accounts that has been surrendered or disclosed as income during the year in the tax assessments under Income Tax Act. So if the company, if say some survey has been carried out and the uh, company has it is found that company has some undisclosed income in the form of assets which were not shown, which were not which were not provided for income to the tax authorities, then the company shall, if such a case happens, then the company shall give details of any transaction not recorded in the books of accounts that have been surrendered or disclosed as income. Okay. So those transactions which the company has not disclosed and which were surrendered during the course of such operations as income, these shall be shown. And it shall also be stated whether previous unrecorded income and other related assets have been properly recorded in the books of accounts during the year. That now when the survey has happened or such operation has happened, whether these related assets have now been recorded. So this point has to be given in the uh, has to be disclosed in the financial statements itself by the company management. Okay, so you would gain more clarity about it when you read further in your income tax law classes. Okay. Now we come to expense items, purchases. So similar to all procedures which are many of the procedures which are relevant to sales, these are also relevant to purchases. So purchases are again one of the major expense items of a company, of an entity. So the auditor is concerned about all those assertions, whether purchases have in fact taken place, whether these have occurred, whether these are not fake. So again, he would be checking control system regarding the purchases. So control system is also a general point which fits in case of many items. So obviously control system तो auditor को check करना ही है. So अगर कुछ भी आपको याद ना आए, so you can write this point. Although it is a general point, you can write it once only. ओके, ये नहीं कि आप इसी पॉइंट के 4 पॉइंट बना के लिख देंगे तो कोई क्रेडिट नहीं मिलने वाला. ओके. So he would be performing all kind of substantive procedures for purchases, like he would be checking sample purchase invoices, he would be verifying their calculation, he would be verifying inward stock, inward goods register to see how the purchases are when purchases are received, when goods are received, how these are accounted for. He would also verify stock records, like when goods are received, how these are updated in stock records, and how entries are made in books of account. What is the system of segregation of duties, like the persons who are responsible for receiving the goods, whether they are not given job of recording entries in books of accounts, how the payments are being made. So all these things he would see while performing his substantive procedures, and he would also perform analytical procedures too by seeing trends of purchases, by analyzing month-wise purchases, by comparing purchases of the current year with preceding years, by calculating various ratios. So these kind of things he would be doing to test various assertions pertaining to purchases. Okay. So again, these occurrence, he would see that purchases are not understated or overstated by performing usual procedures, by performing usual stuff, he would be seeing. So this we have discussed. And he would also see whether the purchases have been made on FOB price or CAF, FOB and CAF. So you know the meaning of these terms? Yes, FOB and CAF. Yes, students. He would also be verifying how the company is making entries in the books of accounts, and input tax component, GST input tax is recorded separately because the company would be claiming that input tax in its GST returns. So it is not to be booked as an expense. It would be, this component would be recorded separately. Yes. Yes, anybody, do you know about FOB and CIF? So FOB, students, FOB and CIF, these are two Incoterms. These are two Incoterms. So these are, Inco means international commerce. So more frequently, these terms are used in export and import business, but now it is common to use these terms even in inland transactions, when the sales and purchase happen within the country also. So now these terms have become common. So free on board means, FOB means free on board, and CAF means cost insurance freight. So FOB denotes that the company is responsible, that the person who is dispatching the goods, he is responsible till the moment the goods are dispatched. He transfers the risk to the buyer the moment the goods are dispatched. But in case of CIF contract, it is inclusive of freight insurance cost. It means that the seller takes the responsibility of making the goods reach at the buyer's point. So all the freight till the goods reach at the buyer's point is borne by the seller. Okay. So cost insurance freight. Yes, Parth Rana, you are correct. Suppliers will bear all the risks. Yes, it is correct. So again, if purchases are from related parties, so this point also fits everywhere. These have to be disclosed, and extra care has to be seen by the auditor in respect of purchases from related parties, whether whether such purchases have been carried out at arm's length price. Okay. So and he has to be satisfied about the completeness of the purchases, that all the purchases which needed to be recorded have been recorded. So how he would see? Again, he would see, say, goods received during the last few days of the reporting period, say last week of the March, and he would see that all goods which have been shown as received in, say, stock records, whether corresponding purchases have been booked in respect of these invoices. So by doing such things, he would try to ensure that purchases recorded are complete. Okay. So ratios, some important ratios like consumption analysis, like stock composition analysis. So consumption analysis means that uh, he would recorded uh, raw material consumed with the preceding period. Okay, and see if there are any unusual variations. So simple, raw material consumed with previous year. Stock composition analysis. So what is stock composition analysis? It is nothing but to see that in overall stocks, say if the stocks are of 1 crore, then what is the ratio of raw material stocks? Because these would be in relation to purchases in case of a manufacturing company. Okay, and he would try to compare it with the previous year's such ratios, previous year's holdings. So in this way, he can find out variations, if any. So auditor should also compare creditors turnover ratio and stock turnover ratio. So this we have already discussed. So creditors turnover ratio is same as we have calculated inventory turnover ratio, guys. It is purchases, credit purchases upon average payables. Okay. So this denotes that how fast the company is in its making payments to its creditors. So if it is fast in making payment to its creditors, um, then it's okay. And if the creditors are outstanding for very long period, it may show fictitious creditors. It may arouse suspicion in the mind of auditor that there is a possibility of fictitious creditors arising out of fictitious purchases which have been booked in the books of accounts. Okay. And required disclosures for purchases. So purchases of stock in trade have to be disclosed separately. Say in case of manufacturing companies, guys, Schedule 3 asks you to state cost of material consumed. But simultaneously, if the company is also purchasing finished goods, it is also engaged in trading, then purchase of stock in trade has to be disclosed separately. Like I am showing you Schedule 3. So here you would see that in expenses, there is a separate line item, cost of material consumed. So what is cost of material consumed is, it is opening stock of raw material plus purchases of raw material minus closing stock of raw material. Okay, but purchase of stock in trade, this is a separate line item. Purchase of stock in trade is a separate line item. Clear, guys? So purchases of stock in trade, purchases of traded goods, these have to be shown separately in statement of profit and loss. So whether changes in inventories of finished goods, stock in trade and work in progress have been disclosed separately. So changes in inventories of work in progress and finished goods, plus or minus, these have to be shown separately. So again, see schedule 3, changes in inventories of finished goods, work in progress and stock in trade. This is again a separate line item. Because raw material inventories, its effect has been given here in cost of material consumed. However, a difference between opening stock of work in progress and finished goods and purchases of stock in trade, these have to be disclosed separately as this line item. Clear, guys? So now we come to some other few expenses. So all usual procedures which an auditor applies, which an auditor performs, these also apply to all these expenses. So few major expenses have been given in your module. So we'll quickly go through these, like employee benefit expenses. So employee benefit expenses, what are employee benefit expenses, students? Employee benefit expenses means expenditure incurred on wages, salaries, okay, on provident fund contributions, on ESI payments, gratuity. So all these expenditures are included under the head employee benefit expenses. There is one head in the schedule 3. So again, I am showing you the schedule 3, employee benefit expenses. So it contains all expenditure of the company. It consists of all expenditure of the company which form part of the employee cost. Okay, like any benefits given, any perquisites, salary, wages, any sort of incentives, PF contributions. So all these things form part of employee benefit expenses. So obviously, how the auditor is going to verify this? So we will discuss it generally. You can write it generally also. So tell me, students, if you were an auditor of a company, how would you verify employee benefit expenses? Do not see from your module. Do not see from your module. Write 2-3 points which you, as an auditor, uh, would perform, would do to verify employee benefit expenses, to verify various assertions relating to employee benefit expenses. What steps you would take? Yes, guys. Anybody? Yes, students. मॉड्यूल में मत देखिए स्टूडेंट्स, डू नॉट सी द मॉड्यूल, जस्ट थिंक इन योर ऑन माइंड्स. Logical, what steps can be there for checking employee benefit expenses? Now I have told you the meaning of employee benefit expenses. What stuff is included in employee benefit expenses? I have told you. We have discussed these things. Now, how the auditor is going to verify? Yes, only one, two responses. Yes, students. Tell me how the auditor is going to verify employee benefit expenses. Yes. Yes. Few responses have come. Suman Goel, Anmol Patwa, yes, Priyanka, Manish Kumar, Sangeeta, Parth. Yes. Srinivasan. Yes. So all of you guys are writing valid points. So obviously, first thing for verifying um employee benefit expenses would be I would see wages or salary register. I would verify payroll records. So foremost thing for me to verify would be to verify payroll records. On what basis wages and salaries or employee costs have been booked in the books of accounts. So obviously, this is going to be the foremost important thing to verify payroll records, to verify uh, how the employee costs are being calculated. And then my second step would be, say, I would be checking some appointment letters on a sample basis. So what was contract with that employee, that how much salary is going to be paid, he or she is going to be paid, and whether the salary is being calculated on those terms. So this would be another logical step, second step. So by doing such things, I would be getting comfort. I would be getting comfort. Say then I would be seeing various contributions like PF contributions, whether these have been calculated properly. Okay, so I would randomly check such things, whether these have been calculated properly, whether these are being deposited. So all these type of things I would be doing. So such things are there in the audit procedures given in your module, like obtain an understanding of the process of capturing employee attendance. So how obviously if an employee is on a leave, say for 15-20 days, so normally subject to company rules, obviously company would not be paying him the money for the whole month. Obviously he would be getting his salary subject to company rules on the number of on the number with respect to number of days with which he is attending the office. Say if two leaves are allowed in a month, obviously he would be getting full salary. But if he is absent for more than 2 days and those leaves are not allowed, so obviously he would be getting proportionate salary. So checking attendance records. So he can check attendance record and of a sample and see whether salary is being calculated properly or not. So obtain a list of employees at the period end and see whether how many employees have left and how many employees have continued, and he can trace the variation. So such kind of procedures he can perform. So these are very general procedures. Obtain monthly salary register for 12 months. So this we have discussed. So what I have been telling you, just read all these points at least once. So अगर आप 10 पॉइंट लिखे हुए हैं, 10-15 पॉइंट लिखे हुए हैं, अगर इफ यू आर एबल टू रिमेंबर 3-4, it is good. It is not that you have to remember each and every point here of the audit procedure and you have to write all of those in a 4-marker question. Okay. So again, in case of PF, ESI are applicable to entity, compile a reasonability by applying the rate to the basic wages. Okay. So he can apply the rate at which PF is deducted to the wages and see whether it is proper or not. So perform analytical procedures to obtain audit evidence so as to overall reasonableness of employee benefit expenses. So reasonable test he can also perform. And what disclosures are required under Schedule 3 in respect of employee benefit expenses? It means salary and wages, these have to be disclosed. Contribution to PF and other funds, ESOPs, employee stock options, and staff welfare expenses. So these have to be disclosed separately as per requirement of Schedule 3. Yes, now we come to another expenditure, depreciation and amortization. Yes. So students, you are very much familiar with both of these terms, depreciation and amortization. Now my question to you is, can you tell me the difference between these two terms? Can you tell me the difference between these two terms? What is the difference between depreciation and amortization? Yes. Do not see from your module. Yes. Can you tell me the difference between, although both the terms are used for a similar nature of things, what is the difference? What is the difference between depreciation and amortization? Yes. Yes, Suman Goel, yes, you are right. So depreciation is used for tangible assets, for PPE items. And yes, Harish Chandar and all others, Srinivasan, Darshana, all others you are writing correctly. Priyanka Pandey, Mohammed, Prajakta. So depreciation is used for tangible assets. And for intangible assets, the term amortization is used. Okay. So what do both terms represent, guys? Both terms represent decrease in value of item due to passage of time. Okay. So depreciation represents systematic allocation of depreciable value of an item of PPE over its useful life. Okay. So because value of an item decreases over a period of time due to passage of time, so that is why depreciation is recorded in financial statements. That is why it is important to record depreciation, to calculate depreciation in financial statements. So similar is the case with amortization. So amortization represents systematic allocation of depreciable amount of an intangible asset over its useful life. So again, students, depreciation and amortization, these constitute one of the major items in financial statements of the company. So the auditor has to be careful. He has to be skeptic while verifying these items. So depreciation is arrived keeping in mind the useful life of the assets. So students, where are these useful life given? How? Where are these useful lives provided? Yes, in respect of PPE items, where are these useful lives provided? And students, remember that if depreciation has not been calculated properly, it would have an impact on the profits of the company. It would have an impact on the financial position, and the position of the company may not be true and fair if the depreciation is not calculated properly, if the depreciation is not arrived at properly. Yes. So where are useful lives in case of companies described? Yes, anybody? Yes, so we'll come again to this part. So till then, students, you apply your mind. Where are useful life of PPE items in case of companies described? इतनी देर आप सोचें, आगे इसे हम आगे चलते हैं. So obviously, depreciation is for verifying depreciation, the auditor would obtain understanding of the entity's accounting policy relating to depreciation and amortization. Ensure that the company policy for charging depreciation is as per relevant provision of Companies Act and applicable accounting standards. Verify that this accounting policy has been applied on a consistent basis from year to year. Whether to see whether the depreciation has been calculated after making adjustment from the residual value. So we have to calculate the depreciable amount by reducing from the cost the residual value. Okay. So whether depreciation and amortization charges are accurately calculated and recorded. These are recorded in the appropriate period. So all these type of general things the auditor would have to verify. And students, one more important point which you have to remember, that when financial statements of a company are being prepared, then the company applies depreciation in its books of accounts in accordance with the provisions of the Companies Act 2013. जब आप कंपनी की बैलेंस शीट बना रहे हैं तो जो कंपनी की बुक्स ऑफ अकाउंट्स में बैलेंस में डेप्रिसिएशन लगेगा, दैट वुड बी इन अकॉर्डेंस विद प्रोविजंस ऑफ कंपनीज एक्ट, read with applicable accounting standards. So इस टाइम पे you have to forget about the income tax act, about the rates which are prescribed in the income tax act. So some students do get confused between these two things. So when the company would be filing its income tax return, then obviously it would be adding back its depreciation calculated in accordance with the Companies Act, and claiming depreciation which is admissible under Income Tax Act to arrive at its total income. So this practical point, this is a practical point, and this you have to keep in mind also. Suppose a MCQ comes that a company has to charge depreciation in its books of accounts as per what four options are given. So as per Income Tax Act, also one option is. So many students may put it tick on this option because they would be saying okay इनकम टैक्स के हिसाब से तो लगाना ही है. लेकिन जब कंपनी अपनी फाइनेंशियल स्टेटमेंट्स बना रही है, कंपनी अपनी बुक्स ऑफ अकाउंट्स में एंट्री कर रही है, तो वो डेप्रीसिएशन कैसे चार्ज करेगी? एज पर requirements of Companies Act 2013, read with accounting standards, read with applicable accounting standards. Okay. So again, these are all again procedures. These are repeated here. Obtain an understanding of the entity's process of charging depreciation. Obtain fixed asset register maintained by the entity. And to see that all the fixed assets which are appearing in the register are there in the schedule of PP items. So these are all usual things. Select the sample of assets from fixed assets registers and verify the rate of depreciation. So what it is saying that there are huge number of items and it is not possible for you to check each and every item, and you are selecting some items, you are selecting some sample items and checking depreciation on those items. Okay. Yes. Obtain the list of all components identified by the management. So another important thing, students, ensure depreciation is charged on the assets from the date when it is ready to use and not from the date of actual usage. Now it is very important, students, that depreciation in books of accounts is to be charged from the date when the asset is ready to use, when it is available for use, not from the date when it is actually used. Say if the asset, if a machinery is installed and say test production has been carried out, and but the actual commercial production starts say after 4-5 months, so the depreciation would be charged from the date when the asset is available for use, when it is ready. Okay, because time has started from that period. ओके उसका काउंट डाउन तो उसी पीरियड से शुरू हो गया है जब वो इंस्टॉल्ड है, प्रॉपर कंडीशन में इंस्टॉल्ड है, all parts have been assembled and the machinery is ready for use, so its countdown has started. Okay, so this is also an important point. So in case, so students, you are getting impatient about useful life of assets. So I am coming to that point. So many students are sending mails. They are making their own estimates. So when the company is preparing a separate schedule for depreciation under Income Tax Act, like I have been telling you, they would be preparing a separate schedule for depreciation admissible under Income Tax Act as per rates prescribed under Income Tax Act. Okay, so obviously the auditor would be reconciling both the things, that whether the additions which are shown there in the income tax schedule for claiming depreciation are the same. because addition and deletions in both cases would be same. The only difference would be on the manner of charging depreciation or on the rates of depreciation. Okay. Yes, Parth, you are correct. This is the point I am telling you. In income tax, under income tax, depreciation is available under section 32 of Income Tax Act from the date when asset has been put to use. This is under Income Tax Act. But from accounting point of view, depreciation is charged uh, from the point when the asset is available for use. Okay. So perform analytical procedures to obtain audit evidence so as to overall reasonableness of depreciation and amortization expenses. So, so just by looking at the figures, say if the machinery is valuing is appearing in the books of accounts of rupees 1 crore, then obviously I have an idea to see by checking depreciation amount figure on the machinery. I can tell whether it is reasonable or not. Although finally I will tell it by calculating, but just by seeing the figures I can reasonably arrive. Okay. So required disclosures for depreciation are accounting policy for depreciation and amortization, useful life of assets. Now here we come. Yes. Useful lives of assets are described in Schedule 2 to the Companies Act. So Schedule 2, students, this is again one of the distinctive points. तो शेड्यूल थ्री तो हम जब से ऑडिटिंग हमने पढ़ना स्टार्ट किया हम शेड्यूल 3 बोलते आ रहे हैं. सो अगर पेपर में आपके एमसीक्यू आता है यूजफुल लाइफ के बारे में, सो आई थिंक 99% ऑफ स्टूडेंट्स शेड्यूल 3 लिख देंगे कि यूजफुल लाइफ एसेट्स की कहां पे हैं. लेकिन दीज आर डिस्क्राइब्ड इन शेड्यूल 2. दीज आर इन फॉर कंपनीज. Useful lives have been described in Schedule 2 of the Companies Act. There are guidelines in Schedule 2 and it contains how useful lives are to be determined. Say in case of factory buildings, it is probably I think 30 years. In case of other buildings, it is 60 years. So in case of general machinery items, probably it is 15 years. So, and specific machinery items are also given. And it contains different instructions, guidelines, what steps have to be kept in mind while arriving at useful life of the assets. So remember, useful life of assets are there in Schedule 2 of the Companies Act. Those who want to see, they can go to the Schedule 2 of Companies Act, which is available on the MCA portal. You go to Companies Act and you see Schedule 2 and it has again got some parts and you would see the useful lives. Okay. So clear, guys? So other expenses, now few other expenses are given, students. So we are not going to waste time on these expenses. These are fairly general. Power and fuel, rent, repair, building, plant, repair to building, insurance, traveling, legal, professional, miscellaneous expenses. So all the usual stuff, all the general procedures which you can think of, these apply here. Okay, like in case of power and fuel, what you are going to verify? You would see electricity bills. You would see that all bills for 12 months have been accounted for. So all in case of rent, you will see rent agreement. You will see rent for 12 months has been accounted for. You would see whether there has been some change during the year in the rent agreement, and the payment is made in accordance with rent agreement. You would also perform analytical procedures. And for repair to different items, repair to building, plant and machinery, the foremost important point for you would be to see that these expenses are in fact revenue in nature, that there is no such expense included in these heads, included under these heads, which is of capital nature. So otherwise it is going to have an impact on the profits. It would reduce the profits wrongly. Okay. So similarly for insurance, so insurance obviously is going to be verified from the insurance policy on which items the insurance has been taken, whether it pertains to stocks, whether it pertains to machinery, building, to which items it pertain, and the period of insurance is important to be checked, like uh, whether any prepaid expenses on this have to be booked, because whenever an insurance policy is undertaken, you understand guys, so obviously say it is valid for a year. So insurance policies may be taken during the period of during the point of a time in a year. Say it may be taken in the month of December. So in this year, only 3 months insurance would be coming. The rest would be going to, it may be going to prepaid insurance, prepaid expenses, because it has been paid in advance. So traveling expenses. So obviously, for what purpose traveling expenses have been incurred? Who undertook the travel, and what was the authorization? Whether there are supporting bills or vouchers along with traveling expenses. So all these kind of things. Legal and professional expenses, on what account legal fees has been paid, to select few bills to see the legal expenses. So these kind of usual stuff, students, whether the expenditure relates to the period under the audit. So you have to see the date. कोई बिल लास्ट ईयर का तो नहीं है, या कोई बिल अगले साल का इस साल में तो एंटर नहीं है. सो अगेन इट वुड बी गिविंग कंफर्ट टू द ऑडिटर about various assertions, whether the expenditure, so this is an important point, this I've been telling you, whether the expenditure qualified as revenue and not capital expenditure. So in case of such profit and loss items, repair repair, the auditor has to be cautious. He has to be extra cautious to see that only items of revenue nature are booked under such expenses. There is a chance, there is a risk that in repair some items of capital nature may be booked wrongly. Okay. Yes, Suman Goel, you are right. That traveling expenses relate to the company. These do not relate to the personal expenses. Okay. Whether expenditure has valid supporting documents like travel tickets, insurance policies. Okay. So this word you can remember, students. This word you can remember. Valid supporting documents. Valid supporting documents. So this also fits everywhere. So whenever you are writing something about expenses, verification of expenses, you can write that it is supported by valid supporting documents. Remember it in your mind. एग्जाम में याद नहीं रहेगा जब तक आप याद करके नहीं रखोगे. Okay, so remember valid supporting documents. So it is an important word, keyword. Okay, so it gives a um, uh, sense of answering the questions in a proper and technical way. Okay. So whether the expenditure was has been classified under the correct head. Obviously, classification assertion would be satisfied. Whether an expenditure was authorized as per delegation of authority. Whether the expenditure was in relation to entity's business and not personal expenditure. This point we have been talking about. So students, you would be seeing that without reading your module, you are able to form procedures on your own. So that's a good thing. Why you are able to form? Because by now you have accumulated a lot of information in your minds, and by using some such accumulated information in the relevant context, now you are able to write the procedures. Okay. So again, these are all the same usual procedures, usual stuff which we have discussed. Obtain, like for rent, obtain a month-wise expense schedule along with rent agreements. Verify if expense has been recorded for 12 months. Okay. Now specific consideration should be given to escalation clause. So here students, only the words are heavy. मतलब तो इसका बिल्कुल सिंपल है. एस्केलेशन क्लॉज मींस वेयर द रेंट एग्रीमेंट हैज प्रोवाइडेड फॉर इंक्रीज इन रेंट. एस्केलेट. See, only the word is heavy. Otherwise, nature or content of it is very simple. Okay. Verify the agreement is in the name of the entity. So that is important. So if you are booking an expense in the name of the company, so obviously the rent agreement should be in your name. It should be between the company and the landlord, and the person between the company and the person who has given the premises on rent. Okay. So similarly for power and fuel expenses, insurance, legal and professional, this all things we have discussed, students. Now, some additional information. Yes. To be disclosed as additional information. Now there is some additional information again to be provided in the financial statements. Now one additional information relates to corporate social responsibility. Yes, students, you have done it in your company law classes, section 135. CSR provisions. Yes. Yes. So Divya Kumari, you are writing no, that you have still not done it. So obviously you will be doing it in a short time, Divya. So students, for certain class of companies which are having which cross a certain threshold limit in respect of turnover or in respect of net worth or in respect of in respect of profits, the companies have to incur some amount, 2% of the average net profits of preceding 3 years as CSR expenditure. So what basically is CSR expenditure? It is corporate social responsibility expenditure. The thinking in the government is that since you are a profitable company or you are a big company, you are crossing this threshold. So obviously, there is a responsibility upon you to do something towards society. Okay, like say do something towards education, like do something towards disaster relief, do something on the health front, do something towards protecting environment. So such kind of things. So these the expenditure incurred by a company on this count is known as corporate social responsibility. Corporate social responsibility of companies. So all companies are not liable to incur expenditure on CSR. CSR expenditure is required to be incurred in accordance with requirements of Section 135 of Companies Act 2013. Okay. Now it has got certain thresholds that if your turnover is greater than this much, if your net worth is greater than this much, or if your net profit is greater than 5 crore, okay, then you have to incur 2% of net profit, average 2% of average profits of preceding 3 years as corporate social responsibility expenditure, CSR expenditure. More about this, you would be nitty-gritty of all this, you would be reading in your company law classes. So far as disclosure requirement in Schedule 3 is concerned, the company has to simply state in its financial statements that if it has carried out CSR activities, that what was the required amount to be spent on CSR head. Okay. So what was the required amount to be spent under CSR head and what the amount has actually been spent. Okay. What was required by law and what has been actually spent. So this has to be disclosed. If whether there is any shortfall, this has to be disclosed. Total of previous year shortfall, this has to be disclosed. Reasons for shortfall, nature of. So all these points you can remember by just remembering shortfall. कि भैया shortfall तो disclose करना है कंपनी को, जितना अमाउंट स्पेंड करना चाहिए था एंड द अमाउंट विच इट हैज स्पेंट. इफ देयर इज ए शॉर्टफॉल, it has to be disclosed. Reasons for shortfall have to be given. Previous year shortfall has to be given. Nature of CSR activities have to be given, have to be disclosed. That what kind of activities the company undertook under CSR, whether it has spent money on disaster relief, whether it has spent money on say education to poor, whether it has spent money on environment protection, and whether it has spent money directly or through some agencies. So all these things you would be reading in your company law classes. So detail of related party transactions. Detail of related party transaction, like say if the company has made some contribution to some entity, say trust controlled by the company, then this has to be disclosed. Okay. Another thing now, disclosures regarding cryptocurrencies or virtual currencies. So students, when the company is dealing in cryptocurrency, so cryptocurrency, students, is a kind of virtual asset, digital assets, as you know, and many entities deal in it, many entities trade in it. So as far as crypto is concerned, students, you have to remember that crypto is is not a legal tender. Crypto is not a legal tender. It doesn't have a legal tender like a normal currency. Although it is called a virtual currency, it is a virtual asset. It is a digital asset, virtual asset which is being traded. Okay, so if a company is trading such virtual asset like cryptocurrencies, so the profit or loss on transactions involving cryptocurrencies, amount of currency held as at the reporting date, and if the company has taken money from somebody to invest in the cryptocurrency, then then it has to be disclosed. Deposits or advances from any person for the purpose of trading or investing in cryptocurrency, that has to be disclosed. Okay. So fair enough, guys. Yes. Now, students, have you done AS29 in your accountancy classes? Yes. Yes, students, have you done AS29 in your accountancy classes relating to provisions and contingencies? Yes. So there is another head relating to provisions and contingent liabilities. So students, this is mostly on the basis of AS29, which you would be reading in your accountancy classes. Ankur Patel, you are writing yes, but all others are writing no. Yes. So I assume that you have not done it. So we will not go into the detailing of these students. So I will only make you understand the broad difference between provisions and contingent liabilities, and then we can see we can ourselves form what procedures the auditor would perform in relation to provisions and uh, contingent liabilities. No, Jay, I am not expert in investing in cryptocurrencies, so I can't help you. So I am not expert in investing in cryptocurrencies. Okay. So yes. So AS29. So provisions and contingent liabilities. So so all nitty gritty, all detailing of all this, students, अगर आपको कुछ समझ में ना आए तो जब अकाउंटेंसी में ये आएगा तो आपको अच्छी तरह से समझ में आ जाएगा. सो जितना भी समझ में आए आप उतना उसको अंडरस्टैंड करें. सो व्हाट इज ए प्रोविजन, स्टूडेंट्स, एंड व्हाट इज ए कॉन्टिंजेंट लाइबिलिटी, एंड व्हाट इज द डिफरेंस बिटवीन टू. तो अगर ये बात हमें समझ में आ जाए तो हमारा बेसिक अंडरस्टैंडिंग इसके बारे में हो गई. तो क्या है प्रोविजन, क्या है स्टूडेंट्स? A provision is a liability which can be measured only by using a substantial degree of estimation. Okay. Yes, page number. Faizan, page number is 5 point. It is 5.85. Page number is 5.85. So provision is a liability which can be measured only using a substantial degree of estimation. So a provision is recognized when these three things are met. Number one, that entity has an present obligation as a result of some past events. So like something has happened in past, but in relation to that event, the company has a liability to pay, and it is probable that some money would leave the company, that there would be some outflow of economic resources, that there would be an outflow of resources embodying economic benefits to settle the obligation, कि उस लाइबिलिटी को पे करने के लिए आपको कुछ पैसा देना पड़ेगा, मोटी सी बात ये समझिए. ओके, that a reliable estimate can be made at the time of obligation. So ये तो कॉमन चीज है. Unless until some reliable estimate of something can't be made, then it can't be recorded in books of accounts. तो ये पॉइंट तो आपको, जैसे मैं बता रहा हूं, ये आपका पॉइंट कई जगह पे फिट होगा. ओके, सो इफ द above conditions are not met, no provision is recognized. So students, इसको let us understand it with the help of an example. Okay, so say company is manufacturing some products, and some products turn out to be defective, and some customers of the company have gone to the court to say against the company for claiming damages that the company has provided them defective products. Now the case is going on in the court. Company's lawyers advise the company that case would be settled in the favor of the company, that there would be no obligation to pay the money. Okay, so would you then recognize this future payment as a provision? No, we would not be recognizing this payment as a provision. Because why? Because with the evidence we have, with the proper professional advice, with the advice of lawyers which we have, the company is of the view that it is not going to incur any expenditure on account of these court cases going on, and it is going to win the case. So therefore this condition is not met. Both these conditions are not met. So these would be not recognized as a provision. Rather, these would be disclosed as contingent liabilities. Yes, Anmol, you are right. These will be disclosed as contingent liabilities. So by understanding this example, you can see, you can understand the difference between contingent liabilities and provisions. So students, you have to remember that provisions are recognized in the financial statements, that liability is created in respect of provisions, entry is made in books of accounts in respect of provisions, whereas in case of contingent liabilities, these are only disclosed as these are. उसको नोट्स ऑन अकाउंट्स में आपको डिस्क्लोज करना पड़ता है कि ये कॉन्टिंजेंट लाइबिलिटीज हैं, दैट द कंपनी मे बी लाइबल टू पे फॉर इट इन फ्यूचर, but these are not recognized. Okay. So clear. So suppose in this example, students, the lawyers say we are talking about a year 31st March 22, 21, 22. The lawyers of the company have advised the company that you are going to win the case. Don't worry. There is no obligation uh, is going to accrue as a result of these court cases, and the company would disclose then such things, such facts that that the court case against the company is going on uh, at this court, and the nature of litigation which is going on. It would disclose such things under the head contingent liabilities. Now, say in next year, in 22 23, say some judgment from higher court has come on similar case. Okay, say judgment, final verdict from Supreme Court or jurisdictional high court has come on the same issue. Okay, which has gone against. So it has set precedent against the company. So now in year 22 23, the lawyers of the company advise the company that now you may have to pay the money. Now this obligation may involve, it could involve outflow of economic benefits, outflow of resources. Okay, and this could be your liability, that the third party, that the customers have filed a suit for so much, and it is going to be settled at this amount because of the precedent, which has been set by the higher court. So now what will the company do? Now it would be recognized as a provision, because now with the evidence available in hand, all the three conditions above have been satisfied. Yes, yes, Suman, yes, you are right. So this is the difference between provisions and contingent liabilities. Okay. So similarly, provision for warranties. So students, when companies sell their product, they may give a warranty. Okay. So they may give warranty, like if your product is defective, we will be replacing it or we will be repairing it. So by experience, the companies may be knowing that some customer complaints usually come, and this much amount is usually needed to settle those complaints uh, due to warranty obligations of the company. So company would be making provisions for such amounts in its books of accounts. Okay, so this was a definition of provisions. And what is the definition of contingent liability? It is completely opposite to it. So a contingent liability is a present obligation that arises from past events and whose existence will be confirmed only on the occurrence of one or more uncertain future events not in the control of entity. So there is a present obligation which has occurred from some past events, but whether there would be a final obligation or not, it is dependent upon certain contingent uncertain events which are not in control in the case of entity. Okay, like like a court case, like decision of court, it is not in the hands of the company. like Like in the previous example, we have seen how the situation has changed merely because some unfavorable judgment has come from the higher court. So, or a present obligation that arises from past events but is not recognized, or it can be the case that a present obligation has arisen but it is not recognized because there is not a probability of outflow of resources embodying economic benefits, that money would not be required to settle the obligation, or the amount of the obligation can't be measured with sufficient reliability. Okay. So this is the definition of contingent liability. So I hope students you have gained a basic elementary understanding of the difference between provisions and contingent liabilities. Okay. So how the auditor is going to verify various assertions pertaining to uh, provisions and contingent liabilities? So obviously he would be concerned about the existence, completeness, and valuation and disclosure relating to all these things. So he has to see that whether all the provisions which have been made, these in fact exist, these were required to be made. So obtain a list of all provisions and compare them with the balance in the ledger. So what is reflected in the balance sheet, what is reflected in the financial statements, it is there in the books of accounts. Okay. Inspect the underlying agreements, like agreement with customers to assess warranty commitments. Say if the company has made provisions on account of warranty obligations, then a auditor may check agreements with the customers to see whether these bind the company, and what is the purpose. Okay. So provision balances have been valued appropriately. So whatever provision has been made, it is done properly, it is complete. Okay. So like in case of uh, provisions pertaining to warranty obligations, so the auditor would be seeing what is the basis for arriving at the provision. Okay. So what is the basis for arriving at that provision? Like how the company has arrived at the figure which has been booked as a provision, whether it is similar to the percentage of past experience which the company is getting in the preceding years, or what is the methodology, whether wherever required obtain experts report calculation and underlying working for the provision amount. Okay. So provisioning may involve complex calculation in certain cases. So then if some opinion of expert is needed, then it is to be seen what is their opinion. Like in some cases, such calculations can be done through an actuary. Through an actuary. Okay. Yes. So you know about actuaries, yes. And Soman Goel, I am not going anywhere. Don't don't get disheartened. Just 2 chapters are being taken by some other faculties in accordance with schedule given by BOS. It is for BOS to decide. Okay. So I'll be there. I'll be there afterwards. I'll be there afterwards. So yes, students, can you tell what is the meaning of actuary? Have you heard this name actuary? Who is an actuary? Yes, guys. Yes, anybody? Yes, students, have you heard this name actuary? Have you heard this term actuary? Yes, guys. No. No response. Yes. No, Divya Kumari, they are not clerks. No, no, no. They are highly skilled professionals. Are Baba, there is a separate institute of actuaries in India, and it is a very, very respected profession worldwide. So actuaries make probability of risk assessments, that given the past experience, what is the probability of certain things happening. So they are expert in mathematical skills, they are expert in statistical skills, in developing models. So actuaries uh, are used, services of actuaries are used routinely in insurance companies to do a lot of things, like to understand that, to understand that how a policy, what should be the proper premium, say, of a policy depending upon past claim experience. Okay. Or say if some disaster has happened, and then what is the likely number of claims which are to come. So this they calculate by using mathematical and statistical models, and by performing complex calculations. Okay. They are not CA. CA is different from actuary. CA के बारे में तो आप पढ़ रहे हैं. CA is auditor. CA के बारे में तो आप पढ़ ही रहे हैं. So the purpose of an actuary is to make risk assessment. So they are even, the services of actuaries are even used in case of banks also, for assessing risks. And nowadays their services are also being used in assessing cyber risks, and in other kind of risks. Yes, Harsh Singh, I'll be coming to the queries. I'll be coming to the queries. Please keep patience. So the auditor may request the management to share the actuarial valuation report. Okay. So he would see the actuarial valuation report, what the actuary has to say, and whether provision has been made on that basis. So if the company has utilized the services of some expert to in preparation of financial statements, then obviously the auditor would be seeing the work of expert. If the company has hired some management expert, okay, so the auditor would be seeing the performance of work of management expert. So management expert, as we have already done in SA 500, is a professional from fields other than accounting or auditing, whose services are used by the company in preparation of its financial statements. This we have done in SA 500. So अगर कोई कंपनी ने मैनेजमेंट एक्सपर्ट लगाया है फाइनेंशियल स्टेटमेंट्स के लिए, तो उसकी रिपोर्ट के बारे में देखना, और वो देखना कि क्या वो उसकी रिपोर्ट रिलायबल है, वेदर ही इज इंडिपेंडेंट फ्रॉम एंटिटी. सो दिस काइंड ऑफ यूजुअल स्टफ, यूजुअल थिंग्स. Now, provisions can be long term or short term. So, these have to be disclosed. Similarly, long term or short term provisions. Now, contingent liabilities, how these have to be disclosed? Contingent liabilities shall be disclosed. Claims against the companies not acknowledged as debts. Say some third parties have filed court cases against the company. So, this is a claim against the company which is not acknowledged as debt, which the company has not acknowledged that it is ready to pay. So claims against the company not acknowledged as debts, guarantees, okay, if there are some guarantees issued, other monies for which the company is contingently liable, any other money for which the company is contingently liable, and commitments. Commitment means, say sometimes students, companies commit themselves for certain things, like for a company may commit itself for executing some capital expenditure project. Okay, so commitments shall be classified as estimated amount of contracts remaining to be executed on capital account, and uncalled liability on shares. If some share money is uncalled, then uncalled liability on shares and other commitments. Okay. And in accordance with AS 29, following disclosures have to be made. So these you would be reading in AS 29. So all disclosures which are required to be made in AS 29, these have required to be made this you have to understand. Okay. So these disclosures you would be reading in your accountancy classes. So I am not duplicating it. Okay. Now some additional disclosures are also given, required to be given, which are stated here. These are detail of Benami property. Now what is Benami? Yes, students, what is Benami? Details of Benami property. Yes. Do you have any idea? Yes, anyone? Yes, any one of you guys, you have any idea of Benami properties? What is its nature? Yes. Yes, Divya Kumari, you are right. Bina naam ki. Benami means without name. Literal meaning of Benami is without name. Nami means name. Be means without. Without name. Literal meaning is without name. So, but how, what is a Benami property and what is the disclosure requirement in respect of these? So students, you have to understand that there is an act, there is a law which goes under the name of Benami Transactions Prohibition Act 1988. Benami Transactions Prohibition Act. So, guys, this act was formulated in 1988, but its rules were notified later on after a gap of some years, and subsequently an amendment was also brought in 2016, I think. So now the government has given a teeth to this act. It has given powers. It has made the act more effective, and it tries to, and by notifying the rules of this act, now the actual process of confiscating such properties has been set in motion. So, students, first of all, sorry, Benami property, you have to understand that Benami property is a property in which a person has invested money, but he doesn't register the property in his own name. He doesn't hold the property in his own name, although he has paid the money for acquiring it. He has paid the consideration for acquiring it. And the property is ultimately held for the beneficial use of that person who has invested the money. So this route, students, was being adopted by some entities to hold properties in names of other persons, in name of fictitious persons, or say in name of employees, or in names of say distant relatives. So the company, the entity is investing money itself, but the property is held in somebody other's name, and it is also used by that person who has paid the money. For the ultimate benefit of that property is going to that person. So Benami property, this can include immovable property also and movable property also. Say, say if somebody keeps cash in locker of somebody else, then it is also covered, and any immovable property is also covered. So you have to understand only this much, that where any proceedings have been initiated or pending against the company under the Benami property, under this act for Benami property, if some proceedings have been initiated, then following disclosures have to be made, like detail of such property, detail of beneficiary, amount thereof. If property is in the books, reference. If not in books, the fact shall be stated. Okay. So what is the nature of proceedings under this act? So these kind of disclosures have to be made in respect of Benami properties. And you would read further in your chapter on audit report in next month, when you would be doing your chapter on audit report, you would see the auditor's reporting requirement also in respect of this. Okay. Relationship with struck off companies. So students, ROC, registrar of companies, has a power to strike off the name of a company under certain circumstances. Say if the company has not been able to carry on its business for a specified period of time, it has not been able to start its business, or if say after physical verification the ROC finds that address at which the company is registered, it is fake, the company does not exist at those address. So these requirements are there in section 260 of Companies Act 2013. So the corresponding section, sorry, 260, it is 248, sorry. I beg your pardon. It is 248. So earlier it was section 560 under Companies Act 1956, previous Companies Act. So if there are transactions with the companies whose name has been struck off, then nature of these transactions has to be disclosed. That what is the investment in securities, what was the receivable amount, okay. So and what is the relationship with the struck off companies. Yes, Partha Sarthi, yes, you are saying a better of transaction in Benami transaction means a better means the person who is promoting that transaction, who is abetting that transaction. So you need not go into the details of this sect because this sect is not in your syllabus. So try to understand the basic idea that if some proceedings have been initiated against the company under Benami Transaction Prohibition Act, then certain disclosures are required to be made. Okay, like detail of property, amount involved, and such things. Detailing of act is not in your syllabus. Abettor means a person who is making that transaction happen, who is helping somebody. Okay. Yes, Priyanka Pandey, without name properties are illegal. Yes. And following ratios are to be disclosed. Now this is also a new requirement, guys, mandated by Companies Act, mandated by Schedule 3, inserted by the last amendments. So these ratios have to be calculated and shown in the financial statements. And important thing which you have to remember, these are the financial ratios which have to be disclosed. That this line is very important. That company shall explain the items included in numerator and denominator for computing the above ratios. That company shall state in its financial statement that how this ratio is calculated, that what is the formula of calculating these ratios. Okay. So what items are there in numerator, what are there in denominator, and further explanation shall be provided for any change in the ratio by more than 25% as compared to the preceding year. Okay, so if there is some if there is variation in ratio as compared to last year by more than 25%, then that has to be stated. So this point is important. कई बार स्टूडेंट्स ऐसे होगा कि ये तो आपको याद रहेगा एग्जाम में कि कुछ रेशियो डिस्क्लोज करने हैं, लेकिन ये जो पॉइंट है 3 लाइनें ये जो नीचे लिखी हुई हैं ये आप लोग भूल जाओगे. तो इसी पे आपका एमसीक्यू आ जाएगा या करेक्ट इनकरेक्ट आ जाएगा. So remember that while calculating ratios, numerator and denominator has to be disclosed for computing above ratios, and if there is a variation in above ratio, if there is a change in above ratio, be it plus or minus, any type, variation word is used, a change word is used. Further explanation shall be provided for any change in the ratio by more than 25% as compared to preceding year. Okay. Yes, number one, Harsh Singh, I'd like to tell you that I am not an expert in Benami laws. Okay, in any case, I'll try to see your question. I am not expert in Benami laws. Okay, so yes, friends. So now we quickly go through one remaining item of that is reserve and surpluses. So one item, students, we was remaining reserve and surpluses. Yes. Yes, we are at page 5.24, reserve and surpluses. So reserve and surpluses, students, this is also this item you find in the financial statements of company. No, this chapter won't be complete today. There is one more class left for this chapter. That is on coming Wednesday. So students, remember that Monday is a public holiday. So next class is on Wednesday. So reserves are the amount appropriated out of profits. So what are reserves? Reserves are appropriations out of profits. Okay, that are not intended to meet any liability or contingency. So there is not any, these are not intended to meet any contingency or commitment. Okay, so these are vital source of financing for internal means. So like say if a company is earning profits, so obviously its reserves are increasing, its revenue reserves are increasing. So how the company is using its reserves? So obviously it is a method of internal financing. It is a means of internal financing, and the company can use it for say for expanding its business. Okay, for meeting its working capital requirements. So reserves can be revenue reserves or capital reserves. So the profit which accumulates in balance sheets over a period of years, this is example of revenue reserve. So revenue reserve is used to supplement divisible profits in linears to finance an extension of business. Okay, to augment the working capital. Okay, it's good, Devya, if you are having class on Monday. So to augment the working capital of the business. So what is the difference between revenue reserve and capital reserve? So capital reserve, students, the amount falling in capital reserve is not available free for distribution. It can be used only for limited purpose. Uh, like say capital reserves are those reserves which are formed out of capital profits, like on sale of some fixed assets. When profit occurs, capital reserve is formed. Like say when shares are issued at premium, then premium amount goes to securities premium account. So it is again, it can be used for a specified purpose. So it is again an example of capital reserve. So we have known that how we have read that how securities premium account can be used in accordance with Companies Act. Okay, it can be used only for specific purposes. So capital redemption reserve, it is also an example of capital reserve. So capital redemption reserve is also an example of uh, capital reserve. So what is capital redemption reserve? So students, you remember section 69 of Companies Act. Yes, students, you remember section 69 of Companies Act 2013? Yes. Yes, guys, you remember section 69 of Companies Act. So when a company, students, buys back its shares, when a company purchases its own shares in accordance with section 68 of Companies Act, then under section 69, when it buys back its shares from then it has to create a reserve equal to the nominal value of shares, equal to the face value of shares, known as capital redemption reserve. Okay, so this reserve again can be used for issuing unissued bonus shares. Yes, Suman Goel, you are right. So this reserve you are stating is created on buyback of securities. Yes, so it is again an example of capital reserve. So again, the auditor would be verifying uh, about the various assertions relating to reserves and performing the various procedures, existence, completeness, valuation, like he would be checking opening balances of reserve, what additions have been made in the reserves, whether these tally with the books of accounts, and if some utilization has been made in the reserve, whether these utilization is in accordance with the requirements of law. So all these things would be seen by the auditor. He would also see the resolution passed by the board regarding recommendation of dividend. So if some dividend has been declared out of the free reserves, then the auditor would see the resolution passed. Okay. So this is again an important point, students. If dividends to holders of equity instruments are proposed or declared after the balance sheet date, an entity should not recognize those dividends as liability at balance sheet date. It should disclose the amounts of dividends that were declared after the balance sheet date, but before the financial statements are approved. Say after the balance sheet date in a BOD meeting, dividends have been declared. So AS4 states that such dividends should not be recognized as a liability. It should be disclosed in the notes to accounts. It should be disclosed. It should not be recognized as liability. So this is important point to remember. If dividends are proposed or declared after the balance sheet date. Okay. So securities premium, then again the same point you have read about it in your Companies Act, how it is to be utilized. It is to be utilized in accordance with Section 52 of Companies Act for issuing fully paid bonus shares, underwriting commission, okay, for writing of preliminary expenses, all those usual stuff which you have remembered till now, and disclosures. So disclosures relating to reserve and surplus has to be done as under, like capital reserves have to be separately disclosed, capital redemption reserves have to be disclosed, separately. If there is capital redemption reserve, it has to be disclosed. Capital reserves have to be disclosed. And this is omitted. Okay. 8 omitted. Okay. Debenture redemption reserve has to be disclosed. This is there. Something is omitted. Debenture redemption reserve is created. So when debentures are to be redeemed, debenture redemption reserve is created. So this is separately disclosed. Revaluation reserve is disclosed separately. Share options outstanding account is disclosed separately. Yes, students, what is share options outstanding account? Any idea? What is share options outstanding account? Yes, guys. Yes. What is share options outstanding account? Yes, Harsh Singh, reserve and surplus is a broad heading. It is a broad nomenclature used for reserves. There is no distinction between reserve and surplus as such. So broad nomenclature is reserve and surplus, under which different kind of reserves are shown. Okay. Yes, guys. Share options outstanding account. Any idea? Yes, share options are outstanding account. Yes, Suman, you are right. These are related to ESOPs. So ESOPs basically, as you know, these are stock options, employee stock options, where employees are given an option to purchase shares of the company in future. Okay. So obviously ESOPs are, when ESOPs are given, so expenditure is booked, so corresponding credit is given to share options outstanding account. So this is what share option outstanding account is all about. Okay. So ESOPs are employee stock options, where options are given to the employees to purchase shares of the company at a price in future, at a predetermined price in future. Okay. Yes. Sumanji is reading too much. Yes, Divya, she is reading too much. Like she has decided to come out with flying colors in auditing, and not only in auditing but in all exams. So Sumanji, students are also praising you. So keep it up. So this is all about reserve and surplus. So we have covered the major parts of this chapter, students. So today I have not taken any break of even a single minute, guys. So as far as your queries are concerned, your today's queries are concerned, we shall be taking it up in next lecture on Wednesday. So all of your queries I'll be taking up. What I'll be doing, I'll be saving all these queries. So next time when we'll be meeting, we shall be discussing many other things about this chapter. We shall be solving questions. We shall be doing case studies, and we shall be also reading your interesting queries. Okay, so I hope students, you have gained a understanding, at least elementary understanding of this chapter, and do not get frightened from the size of this chapter, because 70-75% part of this chapter is being covered by your accounting standards, your company law provisions and schedule 3 requirements. So अगर आपने शेड्यूल 3 अच्छी तरह से कर लिया स्टूडेंट्स, जैसे कि मैंने आपको स्टार्टिंग में बताया था, अगर आपने शेड्यूल 3 अच्छी तरह से कर लिया तो आपका कॉन्फिडेंस लेवल इस चैप्टर में एकदम शूट अप करेगा। ओके। और बाकी जो अकाउंटेंसी और कंपनीज एक्ट वाला पोर्शन है वो तो आप दूसरी सब्जेक्ट्स में कर ही रहे हैं। सो अगर जो लोग ये सिंगल ग्रुप सिर्फ सेकंड ग्रुप दे रहे हैं उनको थोड़ा सा एक्स्ट्रा एफर्ट लगाना पड़ेगा कंपनीज एक्ट के प्रोविजन के बारे में, जो 5-7 प्रोविजंस हैं शेयर कैपिटल के बारे में, सेक्शन 52 से लेके 66 तक, वो थोड़ा सा उनको पढ़ना पड़ेगा। ओके। So we shall be taking all your queries on next Wednesday. I'll be saving this your queries. Your all your queries will be answered. So do not feel disheartened. Keep patience. So thank you so much, guys. It's over for today. Yes, yes, Ashok.